This is a Momentum Media production.
Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Well, good day everyone, it's Liam Garman here, Managing Editor of Real Estate at Momentum Media, the team that bring you the Property Showcase podcast. And today, I'm joined by Sam Gordon, owner and director of Australian Property Scout. Welcome to the podcast.
Thanks, mate. Great to be here.
And it's great to have you, all the way down from the GC.
Yeah, mate.
Yeah.
Sunny GC, mate. Yeah. Heading down to Sydney. Obviously got a potty with Phil after this as well, man. So it's good. I always love coming down,
Just
chatting with you boys.
podcast.
Mate, I love it. It's always good fun, man.
How's the Gold Coast at the moment weather-wise?
It's
Looking
always
nice
good,
up
man.
there?
It's always good. We get a day or two of rain here and there, but most of the time, man, she's 10 to 15 days straight of sunshine, and then you get a day or two of rain. So it's pretty good, man. I'm originally a Sydney boy, but yeah, man, I've been up there for 3 years now, and I don't think I'll be coming back.
Everyone's moving to Southeast Queensland.
100%. Yeah.
I mean, we're seeing that obviously reflected in property prices. Do you still have a lot of clients in Sydney, or are you still down in Sydney often?
Yeah. I mean, I'm probably down once a month back down in Sydney. Yeah, we have a huge client base. We have a huge client base across the country, really. But like Sydney and Melbourne are our two probably biggest hits. Sydney would definitely take the cake, though.
Yeah. So Melbourne is, for your clients, still even bigger a portion than, say, Southeast Queensland?
Melbourne and Southeast Queensland are probably on par.
Right.
Well, especially like in the last couple of years with so many people moving to Southeast Queensland as well in the last like 3 to 5 years.
Like yourself.
Yeah, 100%, man. So like so many people are on that same sort of trajectory, like out of the Southeast Queensland market and Melbourne, but then Sydney does. It has always dominated since the very, very start. So yeah, man.
Of course. Now, I want to get a little bit of insight into your story. So I was going through the Australian Property Scout website.
Yeah, man.
And you were a labourer on the farm. Is that correct?
Yeah.
Let's
way back in the
ask
day.
you that story. And that's kind of where you started your career. You saved up, you invested, and then you became a buyer's agent. So talk us through that journey.
Yeah, 100%, man. So bought the first property at 19, but I pretty much dropped out. I'm a high school dropout, man. Dropped out of school at 16, like just went into year 11. I was traveling from the Southern Highlands, like 2 hours south of Sydney, up to Fairfield every day.
Yeah, no way.
So like,
That's a long trip.
Two trains and a bus, 2.5 hours each way every day. Plus I was playing up in Sydney as well. So at 16, I'd signed my first pro contract for soccer. And it was just too much, man. It was too much of everything. So I left and I started working on the farm. I was actually doing 3 days on the farm and 3 days scaffolding, and then I'd play on the weekends. So it was pretty much like a 7-day work week every week. But I loved it. And yeah, man, pretty much saved. I was actually saving for a car initially. 3 years, man, to kind of save close to 30 grand, like 25, 30 grand, I think it was, when I was pretty much ready to buy my first car. My old boy, mechanic by trade, he kept talking me out of like buying all these old Jap shit boxes, right? Like, these things, he's like, man, something's going to blow up. Like, this is wrong, that's wrong with it. And then eventually, like one day when we were driving back from one of these inspections, he said, mate, why don't you just buy a property? Like, why don't you go buy yourself a house? And I always remembered hearing about people that like who had made wealth or were wealthy people. They either made their wealth in property or they stored their wealth in property.
Yeah.
They were always one of the two biggest things that I always heard. And obviously, like if you look at Australian billionaires, Harry Triguboff back then this is 15 years ago, had like 3,000 apartments. These days he's at like 7,000 apartments, right? Director of Meriton. And man, I just remember like as soon as he said it, I just like got obsessed with that idea and started researching that, and then okay, how do I do it? And yeah, man, at 19 bought my first place, and pretty much the rest is history from there, man.
At 19?
Yeah, so I got bitten by the bug. Man, I was making 39 grand a year, or 750 a week pre-tax, 584 a week post-tax. I remember it so clearly. Pretty much minimum wage.
Where was the first place?
It was in Wollongong, man. It was a little 2-bedroom unit in Wollongong.
So you were rent vesting, or did you move in?
No, I moved into it. I needed the grants to actually buy that property. So I needed the first time owner grant, and there was a stamp duty exemption at the time as well. I wouldn't have had enough to buy my first place if they weren't in play. And then, yeah, man, I bought that one, and then kind of, it was pretty much a chance sort of occurrence after that point where I was actually sitting in the dentist, man. I picked up a property mag. I didn't know anything really about property investing. I just thought, I'll buy this place, and I was renovating it and stuff. And then I picked up this property mag at the dentist, and I'm never early. And I was early for some reason to this thing, and he was running late. So for about 20 minutes, I was just reading through this thing. And then when he came out, I go, man, can I take this? He's like, yeah, 100%. And then man, I got out of the car. You don't
ask, you don't get.
Yeah, dude. And then I went out after the car. I was sitting in the car, read the whole thing back to back for in 2 hours in the car, and then I drove straight to it was actually, after that time, it was too late. So the next morning I drove to the newsagent down the road, bought 3 mags, which Smart Property Investment was one of them back in the day. Yeah, man, bought 3 mags, subscribed to them all, and just gave myself, I joked that I gave myself like a bachelor's of property because I just consumed so much content. And the rest is history, man. I pretty much just started, really building it from there, trialing heaps of different strategies, hit a few different walls. Yeah, kind of went through a lot of different things during the whole process, got burnt by a different buyer buyer's agent at 26, 27, I think it was. Right. And man, that was the real catalyst for me wanting to change and pretty much, dip my toe into that. I effectively replaced my income that I was earning at the time when I was 27, 28, I think it was, after that experience. And then, I traveled for a few years, man. And when I came back, I was like, this is what I want to do. I'm going to have a crack at this thing for 12 months. And if it didn't play out, man, I was going to maybe just go be a builder and develop my own projects. But man, that was 6 years ago and the rest is history.
I wish I surrounded myself with the same people that you did. I mean, that's one thing that we hear from all of our guests on the show, which is, surround yourself with that A team of experts that can help you on your journey. And I wish I did that as well, because I burnt my savings when I was 21 or 20 on the last of the Australian-made Commodores.
Oh, no way.
And you know what the worst part is? It's a really bad car as well.
Way.
I hate it. But anyway, I mean, when I look to sell it, no, it's a great car. Man, what a waste. But, I mean, you went the right path. So talk to me. So
it was just a chance comment that my old boy said.
Yeah.
It was just a comment, man. It was passing comment. It wasn't like they were investors or they were trying to push it on me or anything.
It shows you do have that higher level of thought, right? Because you're maybe I shouldn't. Maybe I actually should. But so you went 8 years investing and then you got burnt by a buyer's agent, which kind of spurred that career. What happened in you being burnt?
Yeah, so pretty much, it was lucky. I was 7 properties in, so I was lucky I actually knew what I was talking about with property. And pretty much, man, it was a funny thing because I went to a property expo or something like that, and I spoke to all these different buyer's agents who are still decent figures in the industry now. Older heads, right? Boys have been around for a while. And I remember I went and spoke to them and I showed them my portfolio and they go, man, you're killing it. You're doing fine. You don't need our help. Just keep doing what you're doing. And then the dude that I ended up going to and the final conversation that I had, because I wanted to speak to everyone and then he was the final conversation I wanted to have. And this, looking back now, this should have been a red flag, but he's like, oh man, we can do so much better. They're average, all the rest of it. Yeah. And I was like, fuck, the deals these boys are getting must be crazy. And man, it was all a fugazi. It was all a load of shit. And then, man, I paid, it was a full fee up front, and then it was it's going to be this big strategy, and then, all the rest of it will take a while to find the right deal. Man, no strategy, literally signed on, paid. That afternoon I was being spammed with properties and I was like, whoa, hang on, what's going on here? Yeah. And it was just lucky. I'd done so many deals. I knew how to call market value. And man, it was simple. The stuff he was sending me off market, even this was, someone with no experience could have seen, should have been able to see. Yeah, man, and the stuff he was sending me off market, I was having a look on market, same properties were literally 20 grand cheaper on market than what he was sending me. So thankfully, I never bought the product, but I effectively had to walk away from my 10 grand and it was non-refundable.
So basically this guy was just trying to tick and flick, just get you on the other side. You've paid what you need to pay and then he's just trying to get you to buy something to say, deal done, I've done my service for you.
Yeah, 100%. He's fully burned his name in the industry now as well. Yeah. He's still out there, he's still playing the game, but yeah, man, effectively everyone just sees through it now. And unfortunately, he definitely still does get people because we have people come over to work with Australian Property Scout that have we have a look at the stuff that he's bought for him and stuff. And he's like, man, he just, fills portfolios with cheap shit units and, with ridiculous body corps and all the rest of it. The same sort of stuff he tried to get me in mind. So, but it was a great lesson, man. And I think even from a business lesson, it's probably one of the best lessons I've ever had in my life. It was expensive. And at the time I was making 70 grand a year. So to get burnt 10 grand, that's after tax dollars. That's huge, man. I was probably netting 55, 60. To get burnt 10 grand is huge. But man, it put my moral compass on such a straight reading because I was like, man, you know what I mean? You can't do that to people and not have them want to kill you. You know what I mean?
100%.
So it's that's really the way I built the business with those ethics in mind of not wanting to put a deal in someone's portfolio that I wouldn't buy myself. So going down that path, man, and really building the business in that way and keeping it like that, we've probably left a bit of money on the table from deals we could have done, but that's paid dividends in the long run because we just have so many clients that understand, the way that we do things, why we do things in a certain way. And man, the results speak for themselves. So
we're hearing so much of that within Smart Property Investment and also our sister portfolios and brands like Real Estate Business about that kind of, not necessarily that this guy is part of that new era of buyer's agents, but the trepidation around that new era of buyer's agents. They see an Instagram reel and the Instagram reel's you can do it too. You can hold your full-time job. It's kind of like a passive income. Just look at realestate.com and send out the email. But you're not actually delivering value for your clients. So you got burnt. That started this career at APS, Australian Property Scout. What do you guys do differently that sets you apart from other buyer's agents? And looking at when you take people on their investing journey, What criteria do you use to say, hey, this is a good investment and do not touch this with a 10-foot pole?
Yeah, man. So like when it comes down to like what we actually select from an investing standpoint, man, even from the location perspective, goes through so many diligence checkpoints to actually tick off an area before we even invest there. And then obviously there's so many checkpoints from then a micro level and then down to the house level of what we actually acquire for people as well. So mate, the amount of, we'd be sitting here for 2 hours if I ran through every checkpoint that we go through in terms of what we actually source for someone. But man, the biggest piece I think from what we do is the strategy component for us is so important. And for us in the way that we do it, and what I find so important is actually, man, it's the same as something you said before, or kind of similar to like the circle of influence, right? Or like what you're trying to build. You have to have people that have been on that same journey and that are in front of you showing you how to do it. It's the same as you say, you see people with a side hustle. If they've never done what you're trying to do, how can they show you how to get where you're trying to go if they've never been there? So effectively, like, man, the way that we strategize people's portfolios is exactly the same way that, for one, I strategize mine. And that I strategize other people in the team that have gotten into the top 0.1% of investors with, 6, 10 plus properties in their own portfolios as well. So, man, that makes a huge, crucial part of it. And, like what happened to me back in the day of, there's going to be a strategy session, then you sign on, you're getting spammed with deals. Like, it's the complete opposite of that. Like, effectively, man, you got to wait for the strategy session, have the strategy session, because it's so important to understand what you actually need in your portfolio to keep moving forward, rather than just tick and flick and just smashing heaps of deals. And, man, no one ever would have seen an ad from Australian Property Scout. So the sister company, School of Property, which is our education arm, man, we run ads for that because that's obviously a different beast, a different business in terms of what we run. But with Australian Property Scout, we never have ads, man, on that front, because so many of the clients that we work with are building portfolios in a big way. So they're repeat. So we have so much repeat and referred business. And man, I think like that it just shows, I guess, the strength of what we do and how we do it, because there's just so many layers to what we do. Because I want to scale people's portfolios, right? Like we have a mission of retiring 500 people by 2030. I think we're going to beat it. I think we're going to retire a lot more people than 500 by 2030. But you don't do that by advertising and taking on 1,000 clients and just ticking and flicking 1,000 clients with one individual property. Yeah. You might do it with, instead of 1,000, you might do it with 100 clients that you do 10 properties for over the next 5 years. So man, that's the way that we look at it, man. We're not trying to build this huge beast and advertise all this money and then just tick and flick and burn all these clients the way that I got burnt back in the day. Or even worse, if you do a shit deal, it's even worse, right? It's not just 10 grand, it could be significantly more, especially if you're way into an opportunity cost. So man, that's the way that we look at it and that's the way we built it. And yeah, man, in reality, that is the big difference with us and what I can see with everyone else.
So your corporate goal at Australian Property Scout, retire 500 people by 2030, is that allowing 500 people to retire literally off their passive income from property?
100%. Yeah, man.
Yeah, wow.
Yeah, the idea is income replacement. So the goal is income replacement for 500 investors by 2030.
Yeah, that's insane. Now, part of what you're doing as
Can
well
I say, it sounds insane. It sounds insane if you and this isn't any offense on your end, but it sounds insane if you haven't done it before or if you don't know what you're doing. When you know what you're doing and you know how to roadmap people's portfolios, it's very, very possible.
It's just a day-to-day.
Yeah, man. It's a roadmap, man. Yeah. And it's understanding like how to keep moving forward and what gets people stuck, and then treating your portfolio like a business. That's the biggest mistake we see with 99% of investors out there. They don't treat their portfolio like a business. They get too emotional about it. They get attached to a property. It's a property. It's an employee in a business. If you wouldn't hold on to a shit employee for 5 years if he's costing you money every year. Yeah. You know what I mean? Like you have to treat the portfolio like a business, and that is the difference between people who acquire. It's why 92% of investors in Australia own 2 or less properties. They own 1 or 2 properties, or that's it. 92% of people is because they don't treat their portfolios like a business. Yeah, you treat it like a businessman. That's how you grow up.
So I like this because what we often hear, especially from guests on this show, but also just from investors that we speak to day, there is always that trepidation to sell because they're like, what if I live to regret it, or never sell. And there is that. I suppose there is that lingering theory in property investing that because it is a long-term game, just never let it go. You disagree with that?
100%.
Yeah, what would you say to them?
It's only a long-term game if you're a novice investor. If you're a novice investor, right? Like in terms of each individual property. Yeah. The only property in your portfolio that should be a long-term play is a cash flow asset. Everything else, man, once it's done its job, get rid of it. Man, people talk about double cycles, right? And like carrying a property through a separate, 2 growth cycles. My biggest issue is you got to look at the velocity of money. Like what is that deal doing for you? And if you're stuck because you're holding onto an asset and it does nothing for 10 years until it grows again, what else could you do in that time frame?
Yeah, that's the opportunity cost aspect, right?
Exactly, man. Like people will talk about like never selling, and like you look at Sydney, and if Sydney doubled between 2000 and 2003, right? And then between 2003 and 2013, it did nothing. For 10 years, it did nothing. If anything, it actually went backwards. For 10 years, when Adelaide, Brisbane, Perth, Hobart, like all these they're capital cities, not to mention all the regional locations that doubled in that time frame. You could have gone and doubled your money somewhere else and then gone and brought it back to Sydney in 2012. And then, like, man, 150, 200% growth since 2013 to where we're now in 2024. So, man, I think it's an uneducated, scared decision, fearful decision to do that. And when you understand that you need to treat your portfolio like a business, that's how you win at this thing. And people, the idea of holding on forever, man, that's why people have 30-year game plans and 30-year strategies. That's why we have,
You've got your 6 years to go by 2030.
Well, man, it all depends, right, on where people are at as well. Yeah. But people starting out now, all right, people starting right now may not hit a full income replacement level by 2030. But the guys we started with in 2019, even through the start of this year, depending how hard they've gone, man, 100% they can hit it as well. And it's not even to say that if they started now, they couldn't hit it by 2030. Yeah. It depends on the income, depends on the income replacement target, so the goal, depends on their risk appetite and how hard they're willing to go. Like, are you willing to play aggressive or do you want to be safer? But man, it's so possible. Like, and I think this is where, when you really understand how to play the game, and that's all this is, it's a game. You have to understand how to play the game and not be emotional. Treat it like a business. Don't be emotional. Anything's possible in this thing.
Yeah, absolutely. Now, you mentioned earlier that you have your education arm as well, which I think is incredibly important. In terms of people need to understand the game, they need to have a basic financial literacy to really go hand in hand with you on this journey, so they know hand on heart that, okay, this is a good decision. I truly understand what I'm getting myself in for here. Give us some insight into your education arm, how you arm people with the facts, the knowledge that they need to retire by 2030. Or, even if they're just doing the education, just so they can make smart investments themselves.
For sure. Man, the biggest piece of it is we realize that the more educated the investor, the smarter the decisions and the quicker that they would act, both in building the portfolio but also on acquiring properties. And I think, like, the biggest fear that comes from so much of this stuff is a lack of education. When you don't understand, it's like a builder, right? Like, if you walked up to a house and we had never built a home before, we didn't know what we were doing, you would look at building a home and you shit yourself. You'd be like, I don't know what to do. You'd be so fearful of that, or trying to rebuild a car or something like that. You know what I mean? Like, if you didn't know how to do it and you'd never done it, you would be scared shitless, right? But if you went through and gave yourself a bachelor's in something, or if you went through and became an expert at something after 10 years, a builder walks up to the house and he goes, yep, sweet, this is how I'm going to. He has no fear. The guy that rebuilds cars every single day has done it for 10, 20. He has no fear. He walks up excited, you know what I mean, to tackle this project. And I think it's where
routine for him.
It is, man.
It's just routine.
And that's why, I look at this stuff with property, and for me, again, it's a game, and it's understanding how to do it. And I get excited when I strategize people's portfolios, because you see these light bulbs go off. People just be like, man, like, I didn't know you could do this or do that, or how to do all these things. And the idea of School of Property, like, obviously we've been building this business for 6 years now. Man, I can't work with every single client. Now, we have other strategists that obviously work with clients as well. I work with obviously a lot of clients still, but man, I can't work with everyone, right? So the idea of School of Property, it's to really give people a really educated breakdown and overview on the way that I look at everything. So effectively, it's my one-to-many rather than my one-to-one. And man, they get all my knowledge sort of thing. And dude, we launched that in December 1st, 2023. So it's pretty much almost a year ago to the day. And I always said I would get it to 100 lessons by the end of 2024. And we're at like 70. We must have been at 72, because I just got the message this morning from my assistant, and she said that we just hit 100 lessons with the webinar that we recorded last week.
Yeah, congratulations.
Thank you, man. I appreciate it. So we do a 2 to 3 hour webinar. I do a 2 to 3 hour live webinar where people hit all their questions at me. It's like 40 to 50 questions I'll normally get through in 2 to 3 hours.
That's a lot.
It is, man. It is. And so and they hit me with portfolio strategy questions, everything, right? And yeah, man. So I do those once a month, and plus all the other lessons that we, built in and accumulated this year as well. Things that I thought were missing or could have been changed or added, or new things that have come into it as well. And man, yeah, we added 28 lessons into it this year over the past 12 months. So man, I think it's a constant learning, you know what I mean? And even for myself, I'm always looking at, like, what else can I learn? What else can I implement? We've had changes in the business. We introduced commercial this year as well. So I was always able to produce as good or better net yields in residential compared to commercial. And for me, I'm like, well, if I can create it in resi, there's less risk, so I'll do that. But then we saw the big yield compression coming in, so we changed that and we swapped over. We brought commercial in this year as well. I'm sourcing for clients too, because it's going to get people on the stage at 2030 for retirement. So man, it's always implementing and bringing new things in and being adaptive to the market. And I think when you treat a portfolio like that, when you treat your journey, your portfolio like that, like that's how you win at it. And the education piece, man, circling all the way back to that, I just think arms you with the knowledge and in a way the experience, because it's coming from me as well and all my learnings, to allow you to make educated decisions and not be scared of the process, but be excited by it. And how do I challenge this? How do I push it? How do I hit this goal this year, et cetera, et cetera. So yeah, man, it's my little love child. You know what I mean? Like it's taken me so long to build this thing, and I absolutely love it. It's
now,
awesome.
there are going to be a lot of people listening to this that, they might be just starting out their journey in investing. They might be like, okay, this sounds awesome, but, they're skeptical. They take everything with a grain of salt or a fistful of salt. Could you share, now I understand that a lot of your clients will have to remain anonymous. We can anonymize them. But do you have some success stories of examples of, where you've brought this to bear and it's worked really well?
Yeah, 100%, man. Like if anyone wants to obviously listen to some investor stories as well, we've got our podcast, Scouting Australia podcast, and man, we've got heaps of investor stories. I always do minimum one investor story a month, pretty much to break down someone's journey that we've helped to build their portfolios. Man, I could think literally 2 people this year that are like 25 or less. I have young Ella Woolcott.
25 years.
Man, she is 24 years old. She's got 5 property portfolio. She's 24.
Oh, no way.
Yeah,
okay.
man.
Okay, then on this note, I'm going to dive a little bit deeper because you will also have those, a lot of our listeners are people that are like, okay, I need to make that leap. I need to get on the, not just property ladder, but get an investment property. And, how much does a 24-year-old earn? That's going to be their first
When she bought her first one, man, she was making like 60, 70 grand.
Yeah.
The most she was making, I think when she bought her last one, she was at like 100 or 110 or something like that. But man, that's only like slightly above the average Australian income.
Like that, that just kind of circles back to, really anyone can do it.
100%, man.
Yeah.
We have another young fella as well, even to throw in the mix. I was just going to throw a couple in there, but like a young fella, young Bailey, man, 12 months ago, it was a little over 12, maybe call it like 18 months ago now, 15, 18 months ago, something like that. And we had the conversation and he's like, I don't really know what to do. I'm stuck. Like I don't have enough for a deposit. And I go, what do you got? He's like, well, I got my ute. And I was like, oh, tell me about the ute. It's like a $50,000 Ranger paid out. And he was 24 at the time.
Yeah.
I said, sell the ute. He's like, what do you mean? I'm like, mate, you're having a whinge about not having enough. And like all this, I go, you got $50,000 ute and you've paid it out over the last like 3-4 years. And I mapped out what we could do for him in 12 months if he was to sell the ute. Man, he sold the ute. He bought 3 properties within 12 months off that one deposit. And literally every 6 months he was just rinsing the equity out and then rolling into the next one. And again, man, he's on the potty as well. And it's just like, mate, it's possible, but it's 100% possible for anyone to do this. But are you willing to do the 1%,
the little bit more?
You know what I mean?
A little bit more.
Are you willing to do what 99% of people won't do to achieve what the 1% will?
Yeah.
You know what I mean? And so many people won't do that. They'll be like, no, I'm not. Like, I worked all this time to pay off his car. I say, yeah, sweet, man. But like, you haven't built anything else at the same time. So, and I always like challenge people with that question. Are you willing to do what 99% of people won't to achieve what the 1% will?
Yeah.
And that's all it comes down to, man. Like if you're willing to do that, it is possible for anyone.
Yeah.
Dude, I was 19 making 39 grand a year, you know what I mean? Like nothing, man, absolutely nothing when I bought the first one. And it was a while ago, but it's the equivalence of probably 50, 60 grand today, maybe, I don't even know, 50, 60 grand today. So it's like, it's possible for anyone, but you just got to, it took me 3 years to save the first deposit as well, right? It's a sacrifice piece. But so many people are actually in a significantly better position than that.
Yeah.
It's just a sacrifice piece. Are you willing to do it to achieve, achieve that 1% result?
So are these typically units? Are they typically houses or a mix of the
Houses,
both?
man. Yeah,
houses.
Yeah. We probably, it wouldn't even be 1% of what we buy would be units or townhouses.
Really?
Yeah. The tiny piece of what we buy that's that are for people that have like sub 300 grand budgets. And it's like, there's in our opinion right now, there's like no real housing markets that make sense at a sub 300K price points.
Well, because you'd be out like 7 hours from a major city.
Well, it's not even that. It's like population size and like the actual, probably like drivers of that economy aren't there to actually make it warrant as an investment. You'd be better off buying in a cheaper product in a great growth location and catching that right and then turning to houses later. But man, over 99% of what we would buy would be houses. So 100%, man, like it's so possible. And then still buying a great product. This is the thing. We'll always strategize on what an investor has available or what they can go out there and actually start with. And then, okay, what's going to stop them first? That's what we always look at. Like what's going to catch you out first? What's going to stop you first? Because we need to build and make sure we build the portfolio that we safeguard against that as much as possible to keep you moving forward.
Now, looking into the crystal ball, what do you think the next 12 months has in store for the property market?
Man, I had this conversation at the start of this year with Phil. And I remember it was a funny thing because...
And looking back, were you right?
I was, man. I was. Because he said to me, he goes, oh, man, it's probably like nowhere's probably going to do like more than like 5-6% or maybe he said 8%, something like that this year. Okay, man, there's 100% locations that will do 20% plus growth this year. I'm like I said, I'm predicting some locations do 20 to 30% plus growth this year.
Yeah.
And they did, man. Like some pockets of Perth where we bought for clients did like 40% this year. There's other regionals that did 20, 30% plus this year as well. So, man, I'm predicting the same thing as exactly what we said at the start of this year as well when I had that interview with Phil. Man, so we've gone back to a 2-3 speed property market. It's no longer a 1 speed of everything's booming during COVID. Man, there's markets that are going to be sliding or going. There's going to be markets that are going backwards in the next 12 months. In 2025, there's markets that'll go sideways, and there's markets that'll have good growth. So, man, like if I was to have a really good look at it and call, it would be no different to what my predictions were at the start of this year for next year as well. I firmly believe the market is going to grow in a lot of locations, and I think a lot of locations will do double-digit plus price growth again. I think 2025 is going to be another really good opportunity for growth in the market, and I think it's also a really good time of potential consolidation of markets that have done really well and repurpose the cash somewhere else too. For us personally, we're transitioning away from residential cash flow. The yields have just been compressed too much because there's been so much price growth the last couple of years.
Of course.
So we're transitioning into those commercial assets now that are giving us that high net return over resi. So yeah, man, I think there's a lot of opportunity in both that market, but then also from a growth perspective, there's still so much potential. And so many people say, oh, I've missed the boat, or it's this or that or whatever. Man, people were saying they missed the boat 40 years ago. You know what I mean? Like 40, 50, 60, every growth market that goes past, people are like, oh, I've missed the boat, never do it. Like I remember my parents said after Sydney did its boom in the 80s or the 90s or whatever, so they didn't buy it. Man, you could bought a property for 50 grand back then that are worth 2 million now.
So,
you know what I mean? Or whatever. Just to throw a crazy number out there. But realistically, like there's always somewhere growing. There's always opportunity. You've just got to find it. Or if you don't have the time, man, outsource it to someone that can do a great job for you from that side as well. So man. I'm still very bullish on the market next year.
Mate, love to hear it. And what's next on the horizon for Australian Property Scout? Because I know you got your fingers in a fair few pies and obviously your podcast as well. Take us through your next 12 months.
Yeah, man, my next 12 months is really just focusing on, actually, to be frank, man, we just had our Australian Property Scout Summit 2 weeks ago now.
Nice.
And one of the first things that I opened with was 2025 for us is the year of the scale. And for me, like that's not APS, right? So like it's APS's year of the scale, but it's for our clients. Like I really believe 2025, a lot of clients are going to go in a really big way. And that's what we're focusing on. We're not focusing, we closed the books halfway through November. We're not reopening until Feb.
Yeah, right.
Maybe. It may be extended from that end, but we're focusing on our clients, man. And like we obviously will reopen at some point to allow new clients to come in and get amongst it as well. But yeah, man, we're focusing on scaling our clients' portfolios, strategizing it properly. What should we be doing in your portfolio? What could you be doing? Here are the options. You know, here's the conservative option. Here's the aggressive option in how we would build it. And that's what 2025 is all about for us. And I think commercial will play a big part in that as well, especially for a lot of clients that doubled their money or more in Perth, in Brisbane, in Adelaide. A lot of regionals that we bought in a couple of years ago are getting close to doubling as well. So there'll be a lot of consolidation and then transitioning into other growth markets and those cash flow assets as well, those commercial cash flow assets as well. So yeah, man, we're seeing a lot of opportunity around that. And I think, again, we dive into School of Property and Scouting Australia podcast. Like Scouting Australia podcast is our free, obviously, product that we deliver as much value as we can within what I'm comfortable of giving from my blood, sweat and tears over the years. But and also inspiring stories with the investor stories. But then School of Property, man, I'm still going to be adding to it in a big way next year. Those live Q&A webinars, they're not going to stop. So like really, we just want to educate as many people as we can and keep building, as many strong property portfolios as we can in 2025 and beyond.
Mate, big 12 months on the horizon.
Huge, man, huge. It's always big, man. It's always big.
Yeah. Well, look, it's been an absolute pleasure. And look, I like chats like this because like you kind of leave like a little bit more G'd up, right? There's so much more to go. And you do, like everyone defaults into that aspect of it's over. I've missed the boat. And you hear people say that all the time, but it's true. Like when you reflect on it, I mean, I'm sure. Oh, I can't even remember because it seems so long ago now. But when the average house price in Sydney hit $1 million, that would have been the front page news story of every major newspaper. And then how many people back then would have thought, oh, it's over. The average house price in Sydney is $1 million. That's done. Not only has it gone up to 1.8, 1.9, but just even pockets within Sydney that have probably over doubled. Tripled in 100%, that time.
Yeah, in that time frame too, man. Dude, if I look at like in that time frame, like that was I own property. Like obviously, I grew up in the Southern Highlands, right? So I bought some stuff down there. And man, I look at the end of the 2017 boom, and then when Sydney hit its $1 million price tag, and then dude, like watching it during COVID, a lot of stuff that I owned was like $750, and then it spiked during COVID to like 1.3, 1.4 mil. You know what I mean? So it's like, and a lot of people in that time frame would have thought it was over. And yeah, like the market was influenced by an outside source. But you look at the outside of that, man, you like Brizzy in that time frame, even from like 2019, 2020, doubled Perth, most Perth pockets doubled, Adelaide the same, all these other locations. But man, there's always places coming around different points in the cycle that are presenting opportunities as well. There's always different, projects and whatnot going on that are going to drive different locations too. So it's never over. You just got to look for the opportunity.
Yeah, look for the openings. Mate, it was an absolute pleasure to have you on the podcast today. Thank you so much for joining us.
Likewise, man.
Well, you flew down from the GC for this.
Yeah, man. Yeah, I did.
Do you have any other meetings while you're here?
Yeah, dude. Well, I got Phil after this, and then I've got 3 other meetings to round out the Savo, man.
Yeah,
so,
nice.
So yeah, it was good. I always like come back down to Sydney, man. Like it's my hometown, right? I lived here for 31 years before I went up there, so I love Sydney, man. I always get to catch up with a few mates while I'm down here as well, which is always
have a few beers.
Fun. Yeah, man.
Yeah.
Have a couple of steaks, have a bit of fun. So yeah, man, it's good. I always enjoy coming back down, and mate, it's an absolute pleasure. Our first podcast together,
I
mate.
know.
So it's been awesome, man.
Hopefully,
100%, brother. It's been awesome.
And we'll be checking in 12 months to see whether the prediction held.
Let's see.
Fingers crossed. That was Sam Gordon, owner and director of Australian Property Scout, and that's all we have time for today on Property Showcase. But until next time, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.